Mr. Vineet Agarwal, Managing Director of Transport Corporation of India Limited, India's largest truck transporter, a company that has done phenomenal work over the last 3-4 decades to bring in quality transport as well as logistics facilities in India. Let's look at the numbers before Mr. Agarwal joins us. Oh, of course, he's with us. Good morning, Vineet ji, and a very warm welcome. Festive greetings. These festivities are also visible in your quarterly numbers, a very strong show. Welcome on Business Today, sir.
Thank you. Thank you. It's a pleasure to be here, and best wishes to you and everyone else at the BT studio.
Right. A very good morning to you,
Let's look at the numbers before we start this conversation.
Yeah.
Net profit for the second quarter is up 22% at 107 crores. It has risen both sequentially as well as year on year. Sales have gone up by 13% year on year to 1,121 crores, and they are flat on a quarterly basis. Flat sales, sir, but rising profit. How come this wonderful thing happened sequentially? And what are the highlights that you can tell our viewers in terms of year-on-year growth?
You certainly have a high benchmark because 12% is not flat sales really, but yes, it was the growth was not very high in terms of certain sectors with consumption being slightly low. But generally, what happened was the shipping business did reasonably well this quarter. And we've been able to really capture a lot of the increase in freight rates that happened on the sectors that we operate. Other than that, certain sections of the automobile industry has been doing reasonably well. Two-wheelers, for example, not so much the four-wheelers, but definitely two-wheelers have been doing quite well. Generally speaking, we had strong contracts that came in in our supply chain business. That has helped a little bit also on the top line side. The bottom line has, with cost pressures being slightly on the higher side, has been a little bit pressured with the other businesses, but Seaways has done quite well.
Sir, very good morning to you. Sakshi this side. Wanted to ask you, especially when it comes to the current quarter that we are in Q3, the festive demand also has to come in. Are you bullish about the demand vis-a-vis last year? Especially why I ask you this is because we've seen this year so far there have been one-offs because general elections were there. Because of that, you did see a slowdown in the previous quarter as well. Has now that abated, and do you think the festive demand will more than cover up for the lost ground this year so far?
Sakshi, what happens for us is that we are a logistics company that starts moving cargo for the stocking of the festival season much more well in advance. So for us that starts happening in August and September, and that is directly visible in our numbers, which is a 12-13% increase on the top line. But that stocking, what happened this year was slightly higher than previous years. That I can say that it is about 5-10% higher, which essentially means that the anticipation of sales in this quarter is going to be higher for our customers, which is on the B2B side. So essentially, we do expect with the good monsoons, consumption to also increase at the rural areas. As I said, two-wheelers has been doing reasonably well. So definitely Q3 should be better from a sales perspective of consumer companies, and that should ultimately percolate down to companies like us as well. The industrials has been doing quite well. So in the last 6 months also, or rather last, I would say 8-9 quarters, which is 2 years or so, the kind of movement that has happened because of infrastructure growth has percolated to the industrials very clearly. And that we see as an extremely positive step that should continue with the government's budget that came in earlier this year.
Mr. Agarwal, if you can just comment on how global supply chains have moved. You move a lot of raw materials into and outside the country. Given this intensity of the Middle East conflict and of course no let-up between Ukraine and Russia, how have the last 3 months been in terms of exit in and out of the country?
It has been challenging, certainly. I think for customers who need to reach out to their customers in the Western markets, the challenge has always been how can I get the cargo fast enough? But I mean, ships have to go around the Cape of Good Hope essentially before they get there, and it is taking longer. Container availability is a problem. Freight rates are on the higher side. There is some softening that is starting to happen, but that's not too much either. So certainly there is an impact on shipping rates globally. The indirect impact of that sometimes happens is that ships that are operating on the domestic sector move out of this sector and they move to international waters for better realization. That helps the domestic sector a little bit with freight rates going up, at least from our perspective, from as a company perspective, certainly not from the consumer perspective. So yes, the international rates, the EXIM cargo is still not out of the doldrums yet. It will take a few more months for it to settle down. Perhaps something when the geopolitical tensions ease down, or if there is a very clear-cut indication of recession in some parts of the world, we will see that these freight rates globally will come down.
Sir, talk to us about the expectation on the EBITDA margin going forward from here. By the end of the year, what have you penciled in? Are you on track to already achieve it? And are there levers in the second half that could further push it up beyond your expectations?
The EBITDA margin percentage is about 10 to 11% is what we look at roughly, because there are years that we are making a lot more investments, so EBITDA tends to go up. Otherwise, it is usually in that range. It has been slightly higher in the last few years because of our sea-ways business, but generally that's the range that we like to maintain because of the business nature of the business. We have given a guidance for a 10 to 15% increase in our top line and the similar type of guidance for our bottom line. We are certainly higher on the bottom line, but I think things will start picking up in the second half of the year from a top line perspective, but not necessarily from a bottom line perspective. They should remain stable. So I would still stick by the estimates that we have given at the start of the year.
Okay. Mr. Agarwal, I observed that a bit of long-term borrowings as also short-term borrowings have gone up in the last 6 months. Is it by design? Is this cyclical? Or is it pointing to some underlying issues in the economy where you are likely to borrow more? Is it something to do with capacity expansion, or is this just normal working capital cycle?
So the borrowing happened actually because we bought new trucks. We also have 280 crores of cash on our balance sheet. So it's not that we are net debt-free company. And we also just did a buyback of 160 crores. So there was enough cash, and this is just because it's actually cheaper to take loans, trucking loans, versus actually using cash. So hence, we've just optimized the treasury functions.
Mr. Agarwal, you did mention that you bought some trucks. I just wanted to point out one thing. Just 1 second, Shell. I wanted to ask you, I believe you have articulated earlier that you're moving away completely from the fossil fuel trucks. You moved a large part of your fleet to CNG already. Is EV now a big portion also, or going forward do we see your fleet turning electric as well?
No, not so right away, because most of our fleet is long distance and also for specialized applications. For example, industrial gases or car carriers, etc. And we've not found a reasonable solution there yet when it comes to EV. So we are certainly seeing good solutions in CNG, LNG, and some of our fleet has already started converting into that. And some of the new fleet is also some of that. However, the transition to completely, it's not completely, but to lesser carbon emission fuels, that is CNG, LNG, will start happening by the end of this decade for sure. It'll get completed by the end of this decade. However, moving to EV, etc., is going to take much longer because trucks are not available. Those kind of trucks are not easily available.
Right. Mr. Agarwal, your business is a leading indicator for the entire economy. You are the first to gauge where capacity expansion is happening and where fresh finished goods are coming out of newly installed factories. In the last 3 months, which sector or which sub-segment of your business has shown addition of fresh capacity, and which segment or which sub-sector has shown more finished products coming out of newly installed factories?
What we are seeing, for example, I mentioned industrials. So industrials is a broad subject, but in that, if you take specifically things like engineering products, I think those have done reasonably well. We know there are lots of metro projects that are coming up, railway projects that are coming up. So some of those companies in that space are doing quite well. Apart from that, the import export of chemicals has increased quite a lot. Specifically, there are plants that have come up in India where there is a lot of capacity. With the capacity expansion, a lot of exports have started to happen. Even domestic movement has increased quite a lot. So those are, although we are the lower end of the cycle in the chemical cycle, but generally speaking, there is movement that's happening because the base is higher, and hence, so industrials is doing quite well. I still see some weakness on the consumer side. FMCG sector are still a little weak. But I think with the good monsoons, that should start picking up.
Okay, Mr. Agarwal, how are you planning on the capex going forward from here? Is there a plan in place for, say, FY25, FY26 already? Do you really need to meet that demand, or are you sufficient?
No, certainly. We need to add more capacity when it comes to ships, to trucks, warehousing, and so on and so forth. This year, we have a capex plan of about 350 crores, which includes about 75 to 100 crores in fleet, then about 100 odd crores in new warehousing facilities, and then about 100 crores we are putting into advance orders for ships that are going to come in 2026. So essentially, in the next 3 years, we think we'll end up spending about 750 odd crores, and 4-year plan is about 1,000 crores of capex. So this will continue.
Right, Mr. Agarwal, thank you so much for your time, and of course, festive greetings to you, to everybody at TCI, and to all family members at home. We hope that the coming 2 quarters are much better than the last 2, and of course that you create a lot of shareholder value as you've been doing for the last 20 years. Thank you for your time.
Thank you so much, and best wishes to you.